So, I want to talk about employer life insurance. Employer life insurance. It is very, very good if your employer has been able to offer you employer life insurance. But I need you to understand some facts about your employer life insurance. Let's start from the best perspective. You have worked with a particular employer for 30, 35 years and then you retire. The day you retire, that employer life insurance has expired, right? And then you are 65, you're 63. Is it at that age you want to set up your employer, you want to set up your standalone or personal life insurance? It's going to be extremely expensive. And guess what? It is even at age 63, 65 that you actually need life insurance. And I'll tell you, do you know that in Canada, if you qualify and you meet the eligibility criteria, you can get compassionate benefit or accelerated benefit from your life insurance. But that is if there is a terminal illness. So your employer life insurance is fantastic, but there are some basic limitations you should be aware of. An employer does not know you bought a house of 1 million or $500,000. That is not their concern. They don't know if you have major projects going on. So when it comes to your employer life insurance, yes, it is fantastic. Limitation number one is the coverage that you are offered. Is it $50,000 coverage or 100,000 life insurance policy or 500,000 life insurance policy? The issue is it enough for your family if uh, you gain admission into heaven? Is your employer life insurance enough or handsome enough to cover all the expenses you currently have, your mortgage, children's education, and all of that, funeral, and all of that? So, in most cases, I've heard some of my clients will say, "Yeah, see, I know I have employer benefit, but I don't have it. So I don't know the benefit." So please, it is very important that you reach out to your HR department to confirm the coverage you have from your employer life insurance policy. So for example, if you have a $50,000 life insurance from an employer, my question is, if life eventually happens in the next 10, 15 years, that is if you're still working in the company and then 50,000 is paid out, is that enough for your family? Right? That might not be enough. So employer life insurance is fantastic. The coverage is not enough. Now, when you are with that employer, it's called a group policy, so it is actually cheaper to have an employer life insurance. So when you leave that employer because you got another job, a better job, right? You lose the former employer's life insurance. And in some cases, you are allowed to convert it to an individual policy. So because you are going to convert it from a group life insurance policy to an individual policy, it is going to be a little bit more expensive. But if you work with some companies, they might give you the same premiums to pay, but it depends on the company that offered you the life insurance policy. So when you go to the new employer, are you sure that employer is going to offer you employer benefits, including life insurance, when you pass the probationary period? That is a fantastic question you need to ask the HR department or during your interview. Yes, your life insurance is useful to you when you are alive. You can actually enjoy what is called compassionate benefit, living benefit. You can also leverage your life insurance policy as a collateral for your loan. These options you might not be able to use an employer life insurance for that because the coverage is not even enough. It doesn't offer cash value, so you can't use it as a collateral for a loan. So, guess what? It is important that you have your personal life insurance apart from the employer life insurance that your employer offers you. Okay. Another perspective to this is the older we get, the more expensive life insurance is. So when you're young in your 20s, 30s, 35, 40, and you can afford life insurance, that is the best time to set it up. When you procrastinate, oh, I'll get it later, at the 60, 65, life insurance policy is extremely expensive at that time. It is extremely expensive at that time. So, guess what? It all depends on you. There are three different types of personal life insurance in Canada, and a professional should explain the three different types of life insurance. Then you will choose. There are benefits to each of these life insurance, and are clauses that you need to know. Once you know the benefits and the clauses of each of the three different types of life insurance, you are to make your choice. So professionally, you need to work with an advisor or an insurance agent or a financial security advisor that can explain the three different types of life insurance without bias, and then you make your choice. I'm telling you with all humility, there are different types of financial advisors. Some will say term insurance is better than universal life or whole life, and some will say whole life is better than universal life or term insurance. Let me put this in perspective. You are the one to decide which life insurance is best for you. But when you work with professionals like my team, we explain the three types of life insurance, and then you get to choose, and we are not biased. Whether you want a term insurance, so far you know the cost implication at renewal, and you want a universal life, you know you have to overfund your policy. You want a whole life, so far you know the limitation in terms of the fact that it has to be funded adequately. You can't make changes in the future to a whole life policy. Then why? Fantastic. We're going to help you set up your personal life insurance depending on your choice. Okay. So I hope you learned something today. Your employer life insurance is good, but it has some limitations. The coverage is not enough, right? And you might lose it when you leave your former employer. Conversion might be expensive because you want to change from a group plan to an individual plan. Number four is by the time you want to set up a standalone life insurance in the future, because you lost your employer life insurance, is already expensive because you're 10 or 20 years older. So guess what? It's important that you do yourself and your generation a good thing. Set up your personal life insurance apart from the employer life insurance that you have. The the funny thing about life insurance is it is something you have to get before you need it. You have to get the life insurance policy before you need it. By the time you need it, you might not be able to get it. So I understand why people procrastinate about life insurance, right? It might not be on your priority list, but it is going to protect your priorities, right? Now, one of the things that I need you to understand is life insurance can make your generation rich. If you have 2 million life insurance, that 2 million goes to your family tax free legally. It goes to your family tax free. But life insurance is not compulsory. So you are the one to determine if you want tax free 2 million to go to your family tax free. You are the one to decide if you want your family or your loved ones to have at least $500,000 if that was to happen today, sooner or later, right? So you are the one to decide if you want to pass generational wealth or generational struggle to your family. So your life insurance is actually very important. So reach out if you have questions, reach out if you want to set up your policy. I hope you learned something today. Thank you very much, and have a good day.